So guys, let us move on in our revision of company audit. Okay, so we have completed up to 7 questions. Now we are starting with question number 8. Explain the provisions regarding rotation of auditor. Before rotation of auditor, we should know about audit committee. Why we should know about audit committee? First, try to understand the process of appointing auditor. If you have audit committee, the audit committee. If you do not have audit committee, then the board of directors will first propose the auditor. So audit committee will recommend. So there is a company like Infosys or there is a company like TCS who will recommend appoint extend company to be the auditor. The first initiation will be by the audit committee. So audit committee will recommend, hey, consider extend company chartered accountants firm for appointment of statutory auditor. So this recommendation they will give to board of directors. 99.9999% board of directors will accept the recommendation. If they reject the recommendation, they will send it back to audit committee and say, sir, will not appoint extend company, will appoint Y-end company. Then audit committee will discuss with board. But that is an exception case. Normally, audit committee recommends to board of directors. Board of directors will put forward this with members in AGM. Now, members in AGM will appoint the auditor. This is the process. So, audit committee recommends to BOD. BOD will recommend to members in AGM, then members will pass a resolution. This is the normal process. Now, Pavan sir, when audit committee is recommending extend company or Y-end company or A-end company, on what basis they choose the firm? On what basis they choose the firm? There is certain criteria. So now before 8 we need to understand audit committee which is in 9. Before audit committee we need to understand 10 which is the process. So now we'll come back to 7 and 8. Now look at this 8, 9. We'll come back later 10. What is the manner for selection or appointment of auditors? So this is the process I told you that is given in this provision. In case of companies having audit committee, the audit committee, and in other cases, the board of directors shall consider the qualifications, experience of the firm. So can you appoint a chartered accountant in practice who is qualified in 2019 for the audit of Reliance Industries Limited? He is competent as per law, but is he having that experience to do? No. So they will also look at whether this auditor has done this kind of audit. See, when you are applying for bank audit, even your ICA or membership empanelment form or RBI, wherever you are filing that, they will ask you, have you done bank audits before? If you have done bank audits before, they will consider better. If you have not done bank audits before, maybe they'll give you small audit. So obviously experience is required. Okay. So based on experience of individual or firm proposed to be appointed. Whether such qualifications, sometimes additional qualifications. For example, you have not done concurrent audit certificate from ICA. So concurrent audit you cannot do. You have not done, some ISA, like information systems audit, they'll not give you bank audit. So qualification doesn't mean only CA. You should have sometimes additional qualifications also. Okay. So whether they are enough for the company or no, audit committee will decide. Provided that while considering the appointment, the audit committee or board shall have regard to any other pending procedures relating to professional matters, either before ICI or by any competent authority or court. So if they are appointing ex-end company chartered accountants, they look for whether there are any cases on ex-end company, whether there are any cases on the partners, whether there are any disciplinary proceedings on the partners by ICI, whether there is any other litigation or any other court case, all these things. They may call for such other information from proposed auditor. So audit committee can call me and ask, Pavan sir, we are considering appointing you to be our company auditor. We need some information. Can you give? I have to give. Where a company is having audit committee, committee shall recommend the name of auditor to the board, and in other cases, board shall recommend auditor to the members in AGM. This is what I told you. Now, there are two cases. The board of directors agree with recommendation, no problem. if board of director disagree with recommendation, then what happens? Sixth point, if board disagree with recommendation, it shall refer back the recommendation to committee for considering citing the reasons for disagreement. Dear audit committee, we are not agreeing with you to consider Extend company chartered accountants firm. These are the reasons. So let us consider A and company chartered accountants firm. If audit committee agrees and again says, okay, go with A and company, then again there is no problem because there is agreement between BOD and audit committee. What if audit committee says nothing doing, we are firm on appointing of Extend company? Then in the AGM, board of directors has to put on the table of shareholders that audit committee recommended Extend company. Board of directors disagreed on so and so grounds and board of directors want A and company. Now in AGM, members, you decide you want Extend company as recommended by audit committee or you want A and company as recommended by BOD. Up to you. Based on that resolution, auditor will be appointed. That's all. You understand? That's it. Now let us understand what is audit committee. Section 177. Is it necessary that every company should have an audit committee? The answer is no. Every company need not have audit committee. So who must have audit committee? 1. All listed companies. 2. Public limited companies satisfying 3 criteria. Any of the 3 criteria, not all the 3 criteria. All listed companies, public limited companies, either satisfying A or B or C. They should have audit committee. Read that. So what are the conditions? 1. Do you have paid up capital of 10 crores or more? Then welcome to 177. Dear public limited company, do you have a turnover of 100 crores or more? Welcome. Do you have a borrowings, outstanding loans and borrowings, or debentures or deposits, all types of loans, long-term loans, 50 crores or above? Then welcome to 177. Remember carefully, in some of the provisions, they mention only loans from banks and public financial institutions. In some provisions, they add debentures and public deposits also. Be careful. 177, all types of loans are covered and it should not be more than 50 crores or equal to 50 crores. So what are they? All listed companies, public companies having paid up capital of 10 crores or more, public companies having turnover of 100 crores or more, public companies having any type of long-term debt which is 50 crores or more. You understand? Pavan sir, this share capital or this turnover or this loans borrowings, how they are to be checked? On the last day of the financial year, previous financial year, as per the audited financial statements, you will verify. So today you are thinking of whether audit committee is required. Latest audited financial statements are there, no? That you need to check whether it is applicable. That's it. So obviously, what is the conclusion? Audit committee is not mandatory for every company. Now let us go back to 8. What is the rotation? Simple. There is so much to be discussed, but I will tell you in a very simple way. Now look here. Rotation of auditors is applicable for the following companies, excluding, this can be MCQ, excluding 1% company, small companies. For 1% company and small companies, it is not applicable. So all unlisted public companies having paid up capital of 10 crores or more, private limited companies having paid up capital of 20 crores or more, all companies having paid up share capital, below threshold limit in A and B, but having public borrowings from financial institutions and banks for more than 50 crores. As per section 139(2), no listed company or a company as mentioned above. That means all listed companies. 1. Rotation of auditor is applicable to all listed companies. 2. For public limited companies, if they have a paid up share capital of 10 crores or more, or if they have borrowings 50 crores or more. In case of a private limited company, paid up capital 20 crores or more, or borrowings 50 crores or more. Then welcome to 139.2. So what is the applicability of 139.2? What is the applicability of 139.2? So read the provision. 1. All the listed companies. 2. Public companies having paid up capital of 10 crores or more, or debt 50 crores or more. Private limited companies, capital 20 crores or more, debt 50 crores or more. You understand? That's all. Shall appoint or reappoint? A. An individual as auditor for more than 5 years. So here, no company shall appoint. That means what? No company shall appoint for more than 5 consecutive years. If it is individual, 5 consecutive years, 1 term. If it is audit firm, 2 terms of 5 years. Read that carefully. I'll tell you how that is to be counted and all. Okay. Look here. Pavan sir, I am appointing an individual. So here, appointment. 5 years valid. After this 5 years, there should be break. This is called cooling period or lock-in period. This is called cooling period or lock-in period. Then comes again 5 years of appointment is valid. Okay, so first 5 years you can appoint, then 5 years there should be cooling period, then 5 years again you can appoint. If it is a firm of CAs, look here carefully, if it is a firm of CS, so here you appointed 5 years term 1, 5 years term 2, then cooling period 5 years, then again you can appoint for 5 years, then again you can appoint for 5 years. So if it is a firm, 5 years you can appoint. After that 5 years cooling period. After that again 5 years you can appoint. If it is a firm, 2 terms of 5 years each. Then 5 years cooling period. Then 2 terms of 5 years again you can appoint. This is what the crux is. Now, there are certain important points, okay. So there is one A limited. There is one A limited. They appointed X and company. X, Y, Z are partners, and they appoint, and now there is one another firm A and company. In A and company, A, B and Y are partners. Can a chartered accountant be partner in more than one firm? The answer is yes. Now imagine X and company tenure of 10 years is over. 2 terms of 5 years is over. Now in the rotation, A limited cannot appoint X and company now. In the rotation, can A and company, or say this is P limited, because A will confuse you, this is P limited. So can they appoint A and company? The answer is no. A and company cannot be appointed as auditor of P limited because of common partner. If there is a common partner, and company is also disqualified. Then same brand, networking firms using same brand name, trade name or brand name. For example, Pavan sir, I have appointed PwC Chennai. 5 years after 10 years of tenure is over. Can I appoint PwC Bangalore? The answer is no. Networking firms. Okay, A and company chartered accountants firm, B and company chartered accountant firms, they are networking firms. Either they use the same brand name or they are associates in some way. You cannot appoint the other company also. So point number 1, if there is a common partner, you cannot. If there is a common partner, you cannot. 2, associate firms or networking firms with same trade name cannot be appointed. 3 is very important. Now there is, P Limited, X and company, X, Y, Z, A and company, A, B, C. Okay. Today 10 years of X and company is over. 2 consecutive terms of 5 years each is over. Now you have to appoint A and company. You have to appoint A and company. Now what happened? Z resigned from X and company and joined, admitted as new partner in A and company. So if you look at this situation, there is no common partner between A and company, X and company. There is no common partner between X and company and A and company. This is a different situation. Now whether A and company can be appointed as auditor of P and Limited because X and company's tenure is over under 139(2). In the rotation, can A and company be appointed? Whether A and company be appointed in this situation, whether A and company be appointed. Whether A and company be appointed. Yes, no. If that Z is there, no, this Z, if Mr. Z is the person who signed audit reports, and conducted audit of financial statements. Of P Limited. So in P Limited, while X and company is performing the audit, who is the person who actually performed the audit? X and his team. Who signed? X. Now he is retiring from the other firm, resigning from the other firm and coming and joining as partner in the new firm. That new firm is also disqualified. A and company can be appointed if Mr. Z has not conducted audit of financial statements and gave audit report to P Limited before. Very interesting provision. So when you read law, when you read the provisions 139(2) and its explanation, students usually cannot understand this. But this can be given in the exam like a case study. This can be given like a case study in the exam. Now another thing is, Pavan sir, 139(2) has given 2 consecutive terms of 5 years each to a firm, but shareholders, members of company can specify by way of passing a resolution. So here For conducting audit of P Limited, extend company is appointed. So imagine this is 10 years. 10 years. Or imagine this is 5 years. Imagine this is 5 years. They can write every 2 years audit partner and the team should be changed. So this extend company, first 2 years, Mr. A, extend company, A is the partner. First 2 years he conducted audit, he and his team. Next 2 years, Mr. B, who is also a partner of extend company, has to conduct. Next year, again you need to change the, auditor. This is called the members of a company can specify by way of passing a resolution that the audit team and the signing audit partner, engagement partner, of the audit firm should be rotated again. So rotation is applicable for 10 years. But in that 10 years also, members, if they want, they can rotate the team. They can rotate the audit partner. You understand? This is also possible. These are the provisions. So read these points. So read this. So there is a doubt. Some student is asking, sir, private limited company PUC limit, paid up capital limit, is it 20 or 50? So this is 139.2, no? 2017 there is an amendment. So here it should be 50, not 20. This is old provision. The correct amount is 50, 139 to 50. Okay, please make a note. It is not 20. There is an amendment. Please make a note of it. $50 is correct. So are we done? Then this explanation 1 and 2, same networking firm, 5 years break of cooling period, then having common partners, one partner resigning and joining the other firm, all these things I have told you. Then 9th question, audit committee is over. 10th question, manner of appointment of auditor is over. Basic question, audit remuneration, nothing great in this. Just take 10 seconds of time, read these 2 paras, khatam. So who will fix the remuneration? Company in the general meeting. In case of first auditor, board of directors. That's all. Removal of auditor. This is a big process. We'll see the removal of auditor in detail. Now, ceiling limit on number of audits. Ceiling limit on number of audits. This is a small question. So read this. The specified number of audits which an auditor can undertake as per section 141(3)(g) should not be more than 20 companies. This limit of 20 company audits is per person. Underline. This is per person. That means in the audit firm, if 4 people are there. In the audit firm, if 4 people are there. So it will be 4 into 2080. You understand? If in the audit firm, 8 partners are there, it will be 8 into 20, 160. You understand? So the number of audit assignments a person is holding at the date of appointment or reappointment has to be considered. In case of audit firm, specified number of companies shall be construed as, number of partners into. Council of ICA specifies that CA shall be deemed to be guilty of professional misconduct. If I am doing 21 audits, I am not telling the companies that I have 21 audits, but I signed 21 audits. It is a professional misconduct. It is a professional misconduct. Then ICA can take any action. If CA is partner in number of firms, say for example, I am partner in A and company, I am partner in B and company. I will not get a 20 there, 20 here, okay? Both put together cannot exceed 20. Okay? Now, in computing specified number of audit assignments, underline, very important. Number of such assignments which he or any partner of his firm has accepted, whether singly or in combination, shall be taken into account. Number of partners on the date of acceptance of audit engagement shall be taken into account. A chartered accountant in full-time employment elsewhere shall not be taken into account. And also write down in the notes, the above 20 shall not include. Write down the above 20, it is not there here, not given. Write down the above 20 shall not include audit ceiling limit. Audit ceiling limit 20 audits. So exclusions. So what are all the exclusions? One person company, small company, dormant company, private limited company having paid up capital of less than 100 crores. Paid up capital less than 100 crores. That means, Pavan sir, can I have 25 audits wherein 10 audits belong to this category? Yes, then that specified number of audit is 15 only, no? They might ask you, Pavan Kumar and Company is a chartered accountant's firm, or Pavan Kumar is a chartered accountant in practice. Already he has 20 audits. Already he has 20 company audits. Now a one person company proposed appointment of Pavan. Can he accept? Will it violate the specified number of audits? The answer is no. Can he accept a small company audit? Yes. Can he accept dormant company audit? Yes. Can he accept audit of a private limited company whose paid up capital is 55 crores? Yes, because these are not included in the 20. Okay. And every member of ICA has to maintain a record of how many company audits I am doing and shall submit that to ICA if it is required. Okay, so check here 2 records. A CA in practice as well as a firm shall maintain a record of the audit assignments in the prescribed manner. Now, I told you already, tax audits. Previously, it was 45. Now it is 60. 60 tax audits you can do. There is no link between this 20 company audits and that 50 tax audits. Okay. Certificate. Before accepting appointment, auditor should be given a written certificate to the company stating that such appointment, if made, will be as per the specified limits. This already I told you the certificate. That is what it is. You understand? And the next question is the powers and rights of the auditor. Again, a basic question. You need not spend much time on it. When you are reading company audit for the first time, you feel like, oh, that rate, this rate, arey baba, all these are normal rates. One is right of access to books of account and vouchers and all the papers, documents, whatever the paper it is. So if I ask any kind of, document you have to submit. Point number 1. Point number 2. Obtaining information and explanation is my statutory right. I can call any officer, I can call any employee, and I can obtain any information or explanation. Why this is given, board of directors are big people. If I ask one of the directors, hey, give that information to me, sometimes they might feel ego, sometimes they might conceal the information, sometimes they might feel like not furnishing the information to me. But boss, try to understand, auditor is a statutorily appointed person. He is having, constitutional or rather legal statutory backup. So, if you are not furnishing information, it amounts to restricting the scope of the auditor, which you should not do. Now, you cannot say, I am Chief Information Technology Officer, I am an engineer, so I am only into research and development of this company, I am a software developer, why auditor is asking details from me? I will not give. Boss, listen, any officer of the company, any employee of the company, if the auditor is asking information and explanation, you have to give. You have to give, that's all. That is 2. 3. Right to receive and attend general meetings. Remember, previously attending general meeting is only a right. Now attending general meeting is a responsibility of the auditor also. It is the duty. You have to attend general meeting. But Pavan sir, I have so many clients. 10 clients may convene AGM on same day. Then what to do? You can send your partner or you can send a proxy who is also a qualified chartered accountant. You can send a qualified chartered accountant. That could be your staff. If your firm is a big firm, 10 client companies are convening AGM on the same day means you are a big firm. You can send your partner. You can send your employee chartered accountant. But it is your responsibility, not just the right. You understand? You understand? Then 4. Right to report to the members. So giving audit report is your right, is your duty. Then right of lien. Oh my God. Right of lien. This is interesting. Actually speaking, this is a bakwas right, okay? Point number 1, it is not a statutory right. All the others are statutory rights. Auditor's lien is not a statutory right. Then you can add one more also. The right to attend, the right to visit any of the branches. Auditor has a right to visit any of the branches. Then this, exercising lien is there, no? There are so many conditions. It is something like in the Contract Act that bailment and pledge, you worked on something and if you are not paid, you can hold the possession, no? That lien it is. The lien can be exercised only on the books of account. The lien cannot be exercised on audit report. The lien cannot be exercised on audit working papers also, because idiot working papers are your papers only. So if this is already my property and you need to give 10 rupees to me, now I am saying if you do not give 10 rupees, I will not give this to you. Idiot, this is yours only. So exercising lien on audit working papers is actually a stupid concept. There is no concept. Working papers is your property. You cannot exercise lien on that because already it is your property. Can I exercise lien on audit report? No. Because unless you give audit report, company cannot convene AGM. So lien can be exercised only on the books of account, not on the other property of the company. That too, I'll tell you one simple equation, okay? You might have studied section 128, 129 of the Companies Act. Proper books of account. Books of account shall be maintained at the registered office of the company. If you are removing the books from there and keeping them at a different place, a resolution by the board shall be passed and be submitted to the ROC within 7 days. So, usually what happens, if my client, I am a chartered accountant in practice, if my client is a sole proprietor, he will bring books to me. If my client is a partnership firm, he will bring books to me. If my client is a company, I will go to company and conduct audit. Why? Because they cannot bring books to my office. That is an offense. Remember one thing, in Chartered Accountants Act, it is clearly mentioned, if the auditors, if the books of the client are found in the office of the auditor, if the books of the client are found in the bedroom of the auditor, residence of the auditor, it is an offense. You are trying to tamper the evidences and you are trying to conceal the information, and the auditor can be subjected to disciplinary proceedings. It might go to arrest also. So basically, you will not have books of account in your hand. How can you exercise lien? Even if you go to the corporate or registered office of the company, conducted audit on these books, and then you are taking it to your office also, you are snatching the property of the company. The company can give a police complaint on you, but in the exam you need not write all this stuff. Whatever 4 or 5 bakwas points I have given in the next thing, what is the auditor's lien? Very important question from exam point of view. Why ICI loves this question, I don't know. Many times it is given, but practically impractical, practically not applicable. Okay, then another very important question, both from the company audit and also in your special audits, audit of government company. In these 2 areas, what are the powers of C and AG in the context of audit of a government company? Remember, I'll tell you a small 2-sentence story. C and AG appointed Pavan Kumar to be the auditor of Imagine ONGC. Imagine ONGC is a government company. C and AG called, hey Pavan Kumar, please come. So they have appointed me. When they have appointed, they have right to appoint me. They have right to give directives, conduct audit like this. They have right to receive audit report. They have right to ask for additional information. And if not satisfied, they can ask the information from the both the company and auditor. If not satisfied, they can ask for a supplementary audit. They will send some other auditor from C&AG department. He will conduct supplementary audit in the company. Simple. So what are the rights of C&AG? 1. In the context of government company audit, 1. C&AG can appoint the auditor. 2. C&AG can give directives or guidelines to the auditors on the manner in which the government company audit is to be carried on. C&AG will have the right to receive the audit report. C&AG can ask for additional information. C&AG can, appoint another team of auditors for supplementary audit or test audit, you call it. They can appoint, they can do sampling audit, test audit they can do. These are the rights. So the auditor's lien is over, the rights of the auditor is over. Then the next big area. Already I have given you a very big clarity on this lien on audit working papers also. Working papers are already property of the auditor. There is no concept of, lien on working papers. Duties is a big question. Removal of auditor is a big question. So till now we have completed all these questions. If you have a doubts, ask me. Then in the next part we'll see the balance.